What's up, everybody? It's the Digital World Podcast, and we're still in this bottoming experience, if you want to call it that. But I do think the bottom is in based on what these chart analysts are saying, and you see everything's in red. But here we see our very good friend XRP is up 7% on the 24 hour, and it's at 162. It went as high as 170. So it looks like if we can get, based on what blockchain backers are saying, if we can get above 175 or around there convincingly, then we are in a breakout, which is exciting. It's good to hear. Now, why do we invest in digital assets? We invest in digital assets because of the value of the protocol. We invest in its utility and what it brings in terms of value to a marketplace. We're not here for mere speculation. Well, maybe you can put a little bit of your money on some speculative coins to make a couple extra bucks, but we're here for the utility of what the assets bring. Now, we're currently not in a utility bull run. This is definitely a very much speculative environment, and so we got to be careful not to be caught holding on or caught holding speculative assets because regulations are coming. But with that in mind, um, we have to hedge our bets against inflation. Currently, what's happening in in our current economic environment, we can look forward to some kind of inflationary environment in which in the last year we've printed what 25% of the total dollar supply, which is insane. It's crazy. And here is Peter Schiff talking about inflation and how it's going to hit the poor and middle class harder than the pandemic did. And so this is crazy. Now take a listen to what he has to say.
You should be concerned. And as I said on the program last time, this is a tax. It is the inflation tax. And if you look at how much the cost of living went up, measured by the CPI, in the first 4 months of this year, it's 2%. So if you triple that to annualize it, we have consumer prices rising at 6% annually. But if you look at the monthly numbers, every month it accelerates. So if you extrapolate the trend of the first 4 months of this year for the entire year, you're going to get a 20% increase in consumer prices in 2021.
So, I mean, because our financial system is a global system, other countries, China most notably, buy U.S. treasuries with an expectation of return. If the value of the U.S. dollar starts falling as quickly as these numbers suggest it is, why would any country invest in U.S. bonds and government bonds? I mean, doesn't this threaten to cause, a shakeup?
Well, they won't. Yeah, they're going to be selling U.S. Treasuries. I mean, anybody that can connect these dots is going to be selling U.S. Treasuries. And the problem is there's a lot of U.S. Treasuries to be sold. And they talk a lot about the shortage of goods. The real problem is the surplus of money. Whenever you print a lot of money, it's always a good shortage because the Federal Reserve can print all the money they want. But they don't print products to buy with the money. So we have all this money being printed. We're not producing a lot. People are sitting at home cashing unemployment checks. This is a tax. It is an inflation tax, a Biden tax, whatever you want to call it. But when Joe Biden says that, don't worry, only people that make over $400,000 a year are going to have to pay higher taxes to fund all these programs, he's lying because every American is going to pay the inflation tax, and it's going to hit the middle class and the poor the hardest.
So I don't understand, since you just described it in the clearest possible way. When you print a ton of money, the value of that money falls. It's more money chasing fewer goods, fewer people working to make those goods. Of course you're going to wind up where we are today. with massive disruptions to the labor market and spiking inflation. Why didn't any of the geniuses making these policies anticipate this?
Look, even the so-called geniuses at the Federal Reserve, they keep telling us not to worry because according to them, it's all transitory. But these are the same guys that told us not to worry about the subprime mortgage market. Remember early on, Ben Bernanke said, oh, don't worry about subprime. It's contained. Well, now they're saying, don't worry about inflation. It's transitory. Inflation is as transitory now as the subprime market was contained. And this inflation crisis is not only going to be worse than the financial crisis, it's going to be worse than the pandemic because the government's cure is what's going to kill the economy, not the disease itself.
And I was amazed to hear what he has to say because he has some good content. I think he's a gold bug, but he makes some interesting points here, in terms of that the inflation, the way the Federal Reserve is, or how the government is treating the economy, is gonna be more disastrous in the long run than the actual pandemic itself. And if we're not prepared for that inflation, or don't have hedges against it, then we're gonna suffer the middle and lower classes are gonna suffer the most, and our purchasing power is just gonna diminish down. It's gonna be crazy. You can see that in prices of consumer goods, and when you create all this money, you have more money chasing goods and services, and you have a shortage of supply. And so when you go to the store next time you look at something, see the difference in pricing from what it was, a couple months ago. You'll see that it has a increased um, price on it, and so that's why you want to hedge against it in many ways. Precious metals is one of them, and digital assets is another. I do believe that digital assets are going to be something of a hedge in the future. And that's why if you're invested now, it's a good thing. And you obviously have your long-term bags and your short-term bags, and I always preach on this channel about taking some profits. But that's not financial advice. Everyone has their own plan. But here, the blockchain backer is making a comparison in the market right now, and this is Bitcoin. Okay, now he's showing that we've seen this before, and he compares here these two green bubbles, these blue bubbles. Here we see the Fibonacci, and we see that we've reached the previous high down here. We've reached that zone, and the lowest we'll go is at the bottom of that zone. If not, then we're cleared for a breakout, and that's what he's showing here. So it seems like the bottom is either in or nearly in, but we probably won't go any lower than this range right here around 39,000. So it looks like the bottom may be in, and so we could and we see that XRP is making a move up. So that seems to be uh, good news. Now, it's the only way I can put this is invest in digital assets that have value, that have um, a protocol that makes sense, that has utility. Yes, we're still in the speculative bull run, but that doesn't mean you can't add to uh, something that like XRP it's oppressed in price. Okay, but I always say take profits, because we're still in speculation, and that's not financial advice. But you should probably take it anyway. I hope this episode has brought you some value. Like and subscribe. Comment below. What are your thoughts on inflation? And what do you think about what Peter Schiff said? Let me know in the comment section below. Like and subscribe. It's the Digital World Podcast, and I'll see you in the next episode.